What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Tesla, ticker symbol TSLA, on a variety of time frames in anticipation of tomorrow's trading day, Wednesday, February 7th. Well, Tesla stock here today, finishing the day up $4.04 a share, 2.23%, kind of bouncing around here in the after hours. Not a whole heck of a lot of volatility, but listen, as always, whether it confirms your bias or goes against your current sentiment, take after hours movement with a grain of salt. Because volume is so incredibly low almost always, the only exception to that is if volume is very high, like we saw, for example, recently on Palantir earnings, where the earnings move volume in the after hours actually exceeded the majority of intraday volume. That's an exception. Most of the time, take it with a grain of salt. So as far as the 1 minute chart here is concerned, honestly, not a lot to look at, so I'm not going to waste any time. Let's move on to the 5 minute. Before we do, appreciate you if you guys subscribe to the channel, if you had value out of these videos. This is a brand new channel and it helps out tremendously. Thanks again. Let's move on here to the 5 minute chart. I want to look here at volume intraday, because we of course got this big pump off the open right off of that 177.50 region. That's the bottom of that range that we've been talking so much about, between 177.50 and 180. We got that big opening drive pump. Take a look at the volume. It is tremendous on not only that pump, but also the consolidation that followed that pump. Look here, the volume remained high. Now, aside from that, what else did we see here? Right, well, we saw when the stock began to pull back, volume also pulled back. You can see later in the day here, we got that pump, okay? Volume also increased. The fade, volume decreased. Pump into the close, volume increased. Guys, listen, this is textbook. If you're a bull, and this would be the same thing if it were the opposite for the bears, by the way. If you're a bull, you want to see as much volume as possible when the stock's going up and as little as possible when the stock's going down. It's all about sample size. All right. You want the biggest sample size possible, agreeing that the stock belongs higher when it's going up if you're a bull. And if you're a bear, obviously you just invert that, right? You want as little volume as possible while the stock's rising and as much as possible, a huge sample size, agreeing with you when the stock's tanking off. All right, let's move on now and get a contextual view of the self-fulfilling prophecy indicators, those levels, from a day-to-day perspective, starting here with the 30-minute chart. Now, first thing we notice here, right, we're right in that channel. Between the white line, that's the 50-period moving average, the gray line, which is the 200-period moving average. By the way, as you continue to watch the channel, those colors are going to stay the same. The white's going to be the 50-period. The gray is going to be the 200 period, just so to make it a little bit easier so you can watch these ideally a little bit more mindlessly. I want this to be a relaxing experience. But we're right in between that channel. Currently, from the 200 period, we're less than 1% away. And from that 50 period, we're about 2% away. Okay, so listen, from a bullish perspective here, your number one priority, looking at the 30-minute chart, and of course we're always looking at multiple time frames, but looking specifically at the 30-minute chart, your number one priority, reclaim the 200-period moving average. And if we end up seeing a downside test, it's a big volatile day for Tesla, but 2% is not out of the ordinary for this name at all. Upon a downside test to that 50 period, just hold it as a support. But priority number one as a bull, reclaim the 200-period moving average, test it, claim it as support. All right. Now, if you're a bear, obviously you'd like to see that 200 period reject, fade hard down toward that 50 period. And if we see a downside test of the 50, you'd like to see a break downside, try to make a rerun at that 177.50 downside region of that 177.50 to 180 range that we've been talking so much about. Because if you're bearish, you're going to need to see that break here. Now, let's move on here to the 4-hour chart and start getting even a little bit more contextual here. This is where things start to get really, really clear. You can see this 50 period is coming down, currently sitting about 188.50. And of course, that 177.50 line hasn't moved. Just because we switch time frames, it's always going to be relevant on any time frame. But we currently are approximately 1.7% from that 50 period here on the 4-hour chart. So from a bullish perspective here on the 4-hour chart, if you're looking at this chart, your priority number one on this, again on the 4-hour in particular, is going to be to reclaim that white line, that 50 period. Okay, because I mean, ideally, it's been a number of weeks at least. Let's actually zoom out. It's been all the way back since December 28th, 2023, since we've been above the 50 period here on the 4-hour. A reclaim of that would be a really nice start in making our way away from that 177.50 to 180 range of what's going to be seen as a psychological potential support level, but a downside break is also a big psychological mishap. Most likely would likely be pretty discouraging to quite a few bulls. So let's move on here now to arguably the most important chart. That's going to be the daily. Okay, now you can see here right off the bat that 50-day and the 200-day, those are right up around kind of straddling 230 a share. Not immediately relevant when we're looking at tomorrow. Okay, so here's what I'm watching on the daily. And, really over everything else, I'm obviously keeping a close eye on those moving averages on the 30-minute, on the 4-hour. But over everything else, here's what I'm paying close attention to. Now, I know it's a 4% move to the downside to test 177.50 again. But remember, that range is 177.50 to 180. Okay? From a bullish perspective, listen, I just want to get up out of this hole. Okay, because our backs are kind of against the wall. That's a level that a lot of people are watching as a psychological area that if it holds, that's a good sign. And if it breaks, maybe not so much. All right. And not only does holding that allow us to hold that psychological level, but it also maybe allows us to get up out of this hole and head back toward that highly important psychological area of $200 a share. Now, you bears, if you're currently bearish on Tesla, listen, you have one priority as well. Again, it's a 4% move, but break downside through 177.50 is like the only thing on your mind right now. On a bigger macro scale, obviously you don't want to give up $200 a share, but more immediately relevant, get down below 177.50. That would be highly encouraging to a lot of bears, and I would argue rather discouraging to a lot of bulls. All right. Now, we're going to take a look at the options bias. Let's see what the traders are thinking heading into tomorrow. But first of all, I just want to point out, implied volatility currently sitting in the mid to low range of what has, been historically relevant or more so compared to the recent past, like the last 5 or 6 months. So if in the last maybe 3 to 4 weeks, you've experienced some IV crush in your contracts, and maybe you're not really sure what's going on, this is the culprit. Implied volatility tanking off from 57% down to about 47%. But again, as IV moves lower, typically the options traders are pricing in a little bit more comfort in the stock. So while IV's coming down, if you're just looking at stock price and you don't own options, you would like IV to come down as the stock moves higher. Okay, but if you own options, of course, IV coming down can negatively impact the value of those contracts through the Greek Vega. But at the same time, as IV comes down, it opens up the possibility for new options buyers to potentially benefit from some IV pump as implied volatility returns back toward equilibrium, if it does so, which would be one factor that would positively impact their purchased contracts, okay, assuming they bought when IV was lower. All right. Let's take a look at the chain here on Tesla and get a glimpse, get an idea of what the bias is here today. So 1.96 million total contracts traded, 1.08 million of those were calls, 881,000 approximately of those were puts. So a slight bullish lean here in the chain in terms of bias. Now, short-term speculation, that's 0 to 20 delta. What are those speculators in the short term thinking? 362,000 calls, 287,000 puts, rounded up a little bit. So again, a bullish lean. It's not incredible, right? But we're definitely seeing a bullish lean, not only in the overall call-put ratio, but also in the short-term speculation. As you'll always hear me say, though, make sure your risk is managed. Risk management is always number one, especially when you come here. And of course, the options traders can be wrong. Listen, before you head out, leave a comment on the video. Let me know what stocks you'd like to see me cover here in the near future. You know, even if it is just more Tesla, that feedback really does help out tremendously, and I appreciate it. Thank you so much for watching, and I'll see you in the next one.